Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Thursday, July 13th, and then we'll see how things look for Friday, July 14th. We had another up day. On one hand, you could say that we're looking at good momentum. We're actually trying to break above long-term resistance. But on the other hand, a lot of our indicators are looking a little bit toppy. Doesn't mean we have to stop here. It's just something we need to be aware of. And at some point, the market is going to be due for a pullback. We're just not really sure when that's going to happen. So let's go back and talk about what happened. First of all, the S&P did close above 4,500. That's pretty positive. The Dow, though, did lag in Thursday's session. It was up, but not up as much as the other indexes. Now, the current scenario that the market's back on again is that we might be able to avoid a hard landing, which means we might get a soft landing of some kind. And they're also starting to think that maybe the Fed is close to being done raising rates. Now, this can change at any time. We've already flip-flopped 3 times in the last week and a half or so with this scenario. So depending on what happens, it can always shift. The S&P 500 and the NASDAQ did set new 52-week intraday highs again on Thursday. The mega caps and the broad market showed strength, so we're seeing more participation. On a short-term basis, though, our list is getting pretty long with what's overextended. We have the CMB composite, the moving average study, the CCI 14 and 20, the Stochh RSI, the Williams percent R, the standard deviations chart, the stochastics, the RSI 9 and the Boom 20. Then on an intermediate term basis, we're looking a little extended with the balance of power. Our oscillators are showing some improvement, but still we're seeing that negative divergence. The Sean trend meter, the bullish percent index for both the S&P and the NASDAQ 100, the percent B indicator, which means we've gone above the upper Bollinger Band, the RSI based on 14 periods, and then the other boom indicator based on 50 periods. Long term, we're keeping an eye on the 150 and 200-day moving averages in that study that we look at. The dollar was down. Intraday, it did drop below 100, but it ended up closing back above 100. And interest rates were also down. Both of these together are giving support to stocks. We still have all of the yield curves that we follow that remain inverted. Sentiment is still extreme at 80, where it ticked up from 79. And our trend is looking more positive. The green line's on top, but it's starting to get a little extreme. And it's back above its moving average, but both the ADX and the moving average are above 20. They're also getting kind of close to being near 40. Our bias is positive and our momentum is positive. The economic reports that came out, the PPI was well received. We were up 0.1% month over month. They expected it to be up 0.2%. Last time it was down 0.4%. The core PPI, when you take out food and energy, was up 0.1%, also less than the 0.2% that they had expected. Last time, it was up 0.1%. On a year-over-year basis, that equates to 0.1%, and the core PPI on a year-over-year basis equates to 2.4%. The weekly jobless claims were weaker than expected at 237,000. Continuing claims were up just a little bit, but continued to drop overall at 1.729 million. Here's the intraday chart where we gapped above R1. We didn't get all the way up to R2. We would eventually climb above that. We just kept going all the way up, but then saw a little bit of selling going into the close. This is showing some improvement. When we look at S&P growth versus value, we were above the dashed line. Even though we saw some late day weakness, it did show some improvement. That's encouraging. The ADX is also turning back up above its moving average. The green line is on top, so we default to positive, but it's also getting above 40. Now, this can switch a little bit. When we go from a bear market into a bull market, we might be able to ride this a little bit longer, but we still want to be careful. The red line continues to decline. The daily chart showing where we're starting to get into some more resistance at previous highs. If we keep going up, we might hit the underside of this upward sloping trend line. On the bottom, we can see where volume is below average. Then looking at Dow theory, where the Dow is still pretty much going sideways. The transports did break out, but did not participate on Thursday, so they declined. We did see some improvement with the utilities. When we look at the transports to S&P 500 ratio, it declined overall, but it's still going up. We want to see this continue to go up if we're going to see some good support for the S&P. We're above the 61.8% retracement level. Can we stay above that? Are we going to keep going up, or are we going to get overbought in this area, see some profit taking coming in, and then fall back down? If we stay above this for an extended period of time, if it falls, this may start acting as support. We're also breaking above the previous high with the NASDAQ 100, but we're hitting resistance at this R1 level. Can we continue to go higher? Will we fall back? Can we stay above this previous level? We're also keeping an eye on the cash to the 3-month bond ETF. The ratio really declined, but we want to see this continue to fall if we have more confidence that interest rates are under control and we're more certain about what will be happening. We did see a recent golden cross with this ratio, and that this is going back up. When we want to be more positive on the market, this ratio should be going down. Longer term, we're just about at this resistance level, going all the way back on the weekly chart to the 2018 and the 2020 high. We'll see. Can we break above that, or is this going to present some kind of a problem? We did break above that back in 2022 for a little while, but then just came back down. Also on the NASDAQ 100 weekly chart, we're coming up to this resistance as well. Are we going to be able to keep going, or is this going to cause a problem? With the ratio, we're getting pretty extended now. When we compare the NASDAQ 100 to the Dow, we're back to the levels that we were at the beginning of the dot-com bust, which was the end of the dot-com boom. We can still go higher with this. Is this also going to present a problem? So what's our outlook for Friday? JP Morgan, Wells Fargo, and Citibank will all report their earnings. That could be very influential. The financial sector and the banks have been under a lot of pressure. Is this going to improve that environment? The technicals are positive, but the more we go up, the more overbought we become. You can look at it on one side that we're showing good momentum, but at some point we may wear ourselves out going up and are due for some profit taking or a pullback. The economic report's coming out. We'll be getting import and export prices and the preliminary reading for consumer sentiment. We're keeping an eye on the geopolitical events, but the market's fixated on inflation and interest rates. Here's the updated economic calendar. And looking at the Stock Traders Almanac statistics, we are positive for July 14th, where we're up with the Dow, S&P, and NASDAQ up over 70% of the time. We will be on the 9th trading day of the month. We're starting to get into that point of the month where historically we have topped out and then started to see some weakness. Is that going to happen again this time? We're also keeping an eye on the NASDAQ, which tends to do well in about the middle part of July and then starts to see some weakness. Now, both of these charts that I just showed you, these are historical averages. This is what's happened over time. We can always defy that in any way, shape, or form, but it's a good guide that we use to give us an idea of how the market tends to perform. Our scenarios, not going with the down one right now, even though we are becoming more overbought, but our technicals are very positive. We're going more with the up scenario, even though we are becoming a little extended to the upside. We're not going with the sideways trend right now because our ADX and the moving average are both above 20 and advancing. Warning signs, the long-term trend signals on those weekly charts, we're still not well above those levels yet, so that might signal some kind of a top. Just to be aware of that. The oscillators are still diverging, but they are showing some improvement. The VIX is still showing that there's not a lot of fear. We're watching the S&P to VIX ratio chart. It declines slightly, but we want to see it fall further to see if we're getting some kind of a signal from that chart. The cumulative new highs, new lows did improve for the NASDAQ, but they're still showing overall weakness. We're still above the 2007 level with the 3-month yield. If it starts to come back down, is that giving us a warning sign? S&P 500 growth is still positive, but showing weakness. And then we're starting to get into earnings season. The positive signs, we still have positive seasonality as well as setups that remain in the background. The long-term daily chart for the special K is positive, where the weekly chart is negative. Our longer-term equity put-call ratio is positive since it's declining. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture favoring stocks over bonds. The transports are improving, even though they didn't really perform all that well on Thursday. Lower price levels so far have been providing support. What we're going to be watching for now, if we continue to go up and then we start to fall back, are some of these resistance areas going to provide support? The S&P is outperforming utilities. The NASDAQ is above its 61.8% retracement level now, and the NASDAQ 100 is above that previous high. Can those levels hold? The staples to S&P 500 ratio is declining, giving support to the S&P. The small caps, as measured by the Russell 2000 index, and the mid caps generated recent golden crosses. Please be warned, we have not generated a golden cross with the S&P small cap index. And small and mid cap growth continues to be positive. We're still seeing some strength with the mid cap growth. The Copic curve is generating a buy signal. That was on the books a few weeks ago. It went away. Now it's starting to come back. Our conclusion, the S&P remains positive, but the more we go up, the more overextended we are. We're trying to play that battle back and forth. Whether is that momentum or are we getting extended too far to the upside? In the short term, we're positive, and we've got a pretty long list of overbought indications. Intermediate term, it's positive and becoming longer on that list of overbought signals. Long term, we still remain positive. Thank you. I hope you found this helpful. Please feel free to check out the full-length daily video. I hope you have a great day, and I will talk to you in the next video.